Good morning, everyone. Welcome to the official YouTube channel of Office Society 24/7. How are you all? So let's just start the session. This is our first session of a day that is regarding your principles and practices of banking. So when we talk about principles and practices of banking, this is your paper 2 of of your JAIIB 2024 after IEIFS. Okay. So what actually we have to do in this particular paper? This is the biggest subject of your JAIIB because it covers 55 units in module 4 modules, and these 55 units are very huge. A lot of norms, regulations, restrictions and conditions, everything you have to cover here, as well as the terminologies. There are a lot of terminologies related to banking we have to cover. So this is the biggest subject that we all know. Now what have to be done? First of all, we have to be sure that whatever we are reading, we are having a conceptual understanding, because in the maximum cases you will find from your PPB subject, you will see the case study questions. Okay, what type of questions will be there? There will be case study questions maximum, because it have been seen in May 2023 as well as October 2023. Maximum questions were from the case study. Acha, if you have a case study question, there are two things that have to be done. First, you have to understand the concept. Second, you have to understand the decision making, because whatever condition in the case study, what they are doing, they are creating a certain life situation or a present situation, or we can say simply a life situation they are creating for you, and you have to answer in that situation. If you are in a bank and you are facing this situation, what you will do? So your decision making have to be strong in that particular case. Now your decision making, how it will be strong? After you know what actually the concept is. If you do not know about the concept, if you do not know about the term, let's say for example there is a certain scenario in a bank related to check, and if you do not know what actually the check is, what actually the CTS is, how it actually works, is it a negotiable instrument or not, in which particular section it says that the payment should be in the due course, what if the check have to be dishonored, what if in the check have to be bounced. If you do not know these conditions, if you do not know the sections which are talking about this, it will affect your decision making. So the first and most important thing is having a conceptual understanding. Second, focus on the case study question, like create a situation around you and make answer accordingly. Okay, these are the two things which are very important to be done in your PPB. Okay, so maximum question we can see will be from your case study. So let's start. Now in today's session, what we are going to do, this is your class number 8. So as you know, in the PPB, Principles and Practices of Banking, we have 21 units in module A. Out of 21 units, we have already discussed these 7 units. Now the 8th class is here. We are going to discuss. Okay. Now when it comes to the Achiever series, it is started from 4th of December. If you haven't seen the earlier 7 classes, then do make sure you check the playlist. You will find all the classes recording there. Clear? Now let's move. Which topic is there in the unit number 8 of your, that is foreign exchange remittance for individuals. So what is this particular topic? Let's understand about the topic and then we will move towards the questions. And before that, I will be your mentor for IEIFS and PPB for the JAIIB preparation. If you are preparing for May 2024, do make sure morning 6 AM, evening 7 PM, both the sessions you are regularly watching, both are English medium session for PPB and IEIFS respectively. Okay, now let us start. Achha, apart from that, we have recently started Achievers batch as well from 8th of December. On 8th of December, we had our orientation class about IEIFS, and tomorrow, it means yesterday we had our first demo session of IEIFS. If you haven't seen the sessions, you can check on the playlist. You can, not the playlist but the live section of YouTube channel of Offices at 24/7. You will find the recording there. And if you want to enroll, how to enroll, I will let you know in the end of the session. Now let's start. If I'm talking about foreign exchange, what actually the foreign exchange is? Foreign exchange simply means exchange of currencies. So when you exchange two currencies with each other, that's the foreign exchange. I'm converting rupee into dollar, dollar into rupee, rupee into euro, euro into dollar. These exchange of currencies are known as foreign exchange. Now when we talk about remittance, foreign exchange remittance simply means you are transferring fund from one place to another. Clear? And that which you are doing in the foreign exchange, it means foreign currency. So simply the remittances have to be done. If I am talking about remittance, remittance can be of two types. Actually remittance are of actually four types. Depends upon you are doing it within a country or outside the country. So first let's talk about the remittance. Okay, so there domestic remittance and international remittance, and it have inward remittance, outward remittance. Okay, now when you are doing a domestic remittance, you are transferring money within India only, है from one bank account to another. In that situation, what will be there in domestic, in the inward remittance in domestic market, it means you are transferring money in same bank. And the outward domestic remittance means you are transferring money in other bank. That is inward and outward transaction in domestic remittance. When it comes to the international remittances, it means if you are talking about inward international remittance, it means money is coming from abroad to India. When the fund is transferred from abroad to India, that is known as your inward transfer, okay, or inward remittance. Outward remittance, when India money is transferred from India to abroad, this is your outward remittance. So do remember, in the domestic remittance, inward outward will be different. In your international remittance, the meaning of inward and outward remittance will be different, है ना? So both you have to remember here. Now this is what we are going to talk about, like if you are doing a foreign exchange remittance for the individuals, what are the instruments that can be used, what rules and regulations have to be followed. So let's just start with the first question here. First is asking about purchase of foreign currency from resident person is allowed up to dash or equivalent, and the options we have here is $1,000, $2,000, $3,000, $4,000. Now you have to answer, if you purchase foreign currency from resident person, then up to what amount it is allowed. A, B, C or D. $1,000, $2,000, $3,000 or $4,000. What amount should be? Let me know in the comment section. Okay, and the right answer for this particular question will be your A option, that is $1,000. So if you purchase foreign currency from resident person, है ना, if you are purchasing foreign currency from the resident person only, it is allowed up to how much amount? $1,000 or equivalent. Okay, now next we have, which of the following are not the feature of FEMA? Achha, if we are talking about FEMA, let's understand one thing. Earlier, what used to happen, Indian economy used to be the closed economy. Now, what is closed economy? Closed economy means the economy where there is a restrictions by government on the export and import of goods and services. That economy is known as your closed economy. India used to be the closed economy. So, in 1947, actually, we have introduced Foreign Exchange Regulation Act. As the name suggests, Foreign Exchange Regulation Act. A lot of regulations, restrictions used to be there on the foreign exchange. It means the transfer of, the exchange of currency. If you want to exchange the currency, a lot of restrictions have to be followed by you, and accordingly, these restrictions was given under the Foreign Exchange Regulation Act, and it is observed or managed by Reserve Bank of India. Clear? What happened then? In 1973, the FARA Act was amended. Certain changes have been done, but not the restrictions. They are not removed. So Foreign Exchange Regulation Act was always focusing on how to create a restriction on the foreign exchange transaction. Like, it's very obvious, if I want to transfer the fund from India to abroad, there is a restriction. And let's say, for example, if I am going for a medical emergency, for the tourist, and let's say for education, whatever purpose I am going abroad, I am coming from abroad to India, there is a limit. For this particular purpose, this amount of money will be exchanged, not more than that. Then what happened? After this, in 1991, the LPG happened. Liberalization, privatization and globalization. What is it? I have told you in the IE/IFS sessions, where we have discussed Unit 6, globalization, and Unit 7, economic reform, right? So liberalization, privatization, globalization, when we are talking about, the globalization is a way by which we had made Indian economy an open economy. It means there is no restriction from the side of the government on the export and import of goods and services. So one side we are saying whatever you want, how much you want, you can export and import from India, because now your economy is open. But on the other side, you had FARA Act that was putting restrictions on the exchange of the goods and on the exchange of the currency. And these two were not going together. So what happened? In 1999, we have introduced, we means the RBI have replaced FARA with FAMA. Now the FAMA stands for Foreign Exchange Management Act. Now this said that we are only going to manage the foreign exchange. We are not going to put any restrictions. We are only going to manage the foreign exchange, and that's where the globalization was supported by the FAMA. Okay, and this is how the FAMA have been introduced. Okay, so now you have to answer which of the following is not the feature of FAMA Act. First is saying FAMA empowers the central government to impose restriction. Second, the transaction foreign exchange should be made only through an authorized person. Payment to or receipt from any person outside India, as also other deals in foreign exchange and foreign security are restricted. Foreign exchange transaction, foreign security dealing, or owning or holding immovable property abroad by people living in India, they are restricted. So these are the 4 statements given to you. Out of this, you have to answer which of the following is not a feature of FAMA. Not a feature. So if you read the first statement, it's saying FAMA empowers the central government to impose restriction. This is not true. Obviously, this is not true. And I have just explained you in the FAMA, it has said that we are going to manage the foreign exchange. No restriction will be putting on here. So FAMA empowers the central government to impose the restriction. So this is not the correct. Now the transaction foreign exchange should be made only through an authorized person. This is true. Authorized person, it means the person, any entity or any person to whom RBI allowed that you can transact, you can perform the exchange of currency, or you can participate in the foreign exchange. Now, payment to or receipt from any person outside India, as also other deals in the foreign exchange, foreign security restricted. This is true. Foreign exchange transaction, foreign security dealings, or owing or holding immovable property abroad by people living in India are restricted. This is true. So it means not a feature is your only first option. So right answer will be your C. Okay, right answer your C. Next question. The ceiling on the amount permitted to be remitted under the liberalized remittance scheme initially was $. So liberalized remittance scheme was introduced by RBI in 2004, in which outward remittance limit have been given. It means LRS scheme, that is liberalized remittance scheme, allows money to be transferred to abroad from India. And if I talk about this remittance, this is the outward remittance. Okay, this is the outward remittance. And the amount which is right now allowed by the RBI, that is $2.5 lakh. in a financial year. In a financial year, this amount of money can be transferred from India to abroad. Clear? And this can be transferred by the resident individual of the country, including minor. So this amount of transfer or this liberalized remittance scheme is not for the corporates, trust, Hindu undivided family, etc. It is only for the resident individuals who are living in India, and that will also include your minor. Minor means the person who have not attained the age of 18 years. Okay. So this is the right now amount, and it used to be how much amount? $25,000. Okay, from $25,000 it have been increased to $2.5 lakh in a financial year. So your answer will be D. Remember both the amounts. Entity which are authorized by RBI to carry out a specified non-trade related current account transaction, all the activities permitted to full-fledged money changers and any other activities as decided by the Reserve Bank and shall include upgraded FFMCS, select regional rural bank, select urban cooperative banks, and other entities comes under category of authorized dealer. Now let me know authorized dealer category 1, category 2, category 3 or category 4. Which of the following is correct? A, B, C or D? So as I have told you, authorized dealers means the parties, the banks, the institutions, the person to whom RBI have allowed to participate in the foreign exchange transaction. Okay, and the category here is second. Okay, so authorized dealer category second will be the party here. So right answer is B. Next question we have, as per FEMA, the basic criteria for a person to be considered a resident in India is the stay in India during the preceding financial year, which must be for a minimum dash dash. So which of the following is true here? So if we are talking about non-resident Indians, who are non-resident Indian, they are the citizen of our country who are living abroad for 182 days or more than 182 days in a year. Okay, and similarly, if you want to call a certain person resident, that will be the same duration, 182 days or more than that in one financial year. Okay, so right answer will be 182 days. It is same for non-resident Indian, for the resident. Now, drawal of foreign exchange by resident is not permitted for visit to which particular country? Bhutan, Myanmar, Sri Lanka, Bangladesh. If you are going to visit which of the following country, you are not allowed the drawal of foreign exchange, and the country you have is, that is Bhutan. The right answer will be your Bhutan. Okay, so right answer is A. Next question. Next we have remittances under the Indo-Nepal remittance scheme are made under the dash system. First is saying it has dedicated remittance, it has NEFT, RTGS, SWIFT. Which of the following is true? So remittances under Indo-Nepal remittance scheme are made under the dash system. Which system? A, B, C or D? So Indo-Nepal remittance is allowed, but is only one-sided remittance. This is only one-side remittance, that is from India to Nepal you can transfer the fund. From Nepal to India cannot be transferred, and the way that we can be utilized, that is NEFT. So with the help of NEFT we can do remittance from India to Nepal, and that is known as Indo-Nepal remittance. This is one-sided remittance. It means from India to Nepal the fund can be transferred with the help of National Electronic Fund Transfer. Good morning everyone, welcome to the official YouTube channel of Office Society 24/7. How are you all? So first of all, welcome to the channel, and those candidates who have joined us here, do let me know is audio video both are okay, are we good to go? And let's just start the session. In this particular session, we will be talking about your principles and practices of banking. So as we know, every day we are starting our day with the first session of PPB for your May 2024 JAIIB paper. Now what have to be done to clear this particular subject? This is your paper 2. The paper 1 we have Indian economy, Indian financial system, and the paper 2 will be your principles and practices of banking. Now the paper 3 will be AFM. Now what happened in October and May 2023? PPB and AFM, both the paper was together. It means on 2nd or 4th Saturday, you can see the paper of PPB, and on the 2nd or 4th Sunday, you will find the paper of AFM. This is what happened in May 2023 and October 2023. Might be in the next attempt, JAIIB will give you a week gap, or it will not give you any gap between PPB and AFM. So we have to prepare accordingly, so that doesn't matter paper is coming together or paper is coming with a 1 week gap, we have to clear this paper. And for that, first you have to clear the conceptual understanding, so that you will be able to get great marks, because the paper will be dependent on the case study questions, and the case study questions will only be solved when you have a conceptual knowledge. Okay, so let's start today's session. This is our 9th class, and we are discussing module A of your. In the 9th class, the topic we are taking is operational aspects of NRI business. That is your unit number 9, module number A. So this is we are discussing here. Let's start the questions. Before starting the questions, I will be your mentor for IE, IFS and PPB. It means for paper 1 and paper 2 as well. And if I talk about the sessions that is going on, Achiever sessions on YouTube, that is at 6 a.m. you will find PPB session Monday to Saturday, and at 7 p.m. you will find IE, IFS session Monday to Saturday. Do not forget to join these sessions on the regular basis. Let's say if some days session you are not able to watch live, then you can watch recording as well. The playlist is already created. You can check the playlist, you can save your playlist, and whenever you get the free time, you can watch all the sessions together or one by one as suits you. Okay, so let's start the session. The first question we are asking here, that is how many types of accounts are permitted in India for NRI. So we all know who are NRI, non-resident Indians. Those Indians who are living abroad for 182 days or more than 182 days in a financial year. They are what? They are the NRIs. Clear? Now when we talk about the non-resident Indians or NRI, they are the also we have POI. It is actually PIO, person of Indian origin. It is person of Indian origin. The person of Indian origin is the person whose parents belongs to the country. They are the citizen of our country, but their child's birth happened in the foreign country. So that child will be known as person of Indian origin, because his or her parents are the Indian citizens. Okay. So now how many types of accounts are permitted in India for the NRIs and PIO? So first of all, we have non-resident external account, in which CASA RAFA accounts can be opened, but in the Indian currency. It will be opened by NRI and PIO. Second, NRO account, non-resident ordinary account. It will be open in form of CASA RAFA, and it will be open in Indian currency. Now what is the difference between NRE and NRO? So non-resident external accounts allow NRI and PIOs to open account in India in Indian currency, but here the money earned from abroad will be deposited. That is NRE account. If I am talking about NRO account is non-resident ordinary account. It allows the NRI and PIO to deposit their money they are earning from India in form of Indian currency. So let's say, for example, there is an ex-person who went outside the country, who is living in USA, working there, and he is earning money in USA, and he wants to save his money in India. Then he will open NRE account, and that money will be saved in the Indian currency. Second, let's say there is a certain Y person who is living in USA, working in there or living there, whatever, but some part of earning comes from India. So that money will be maintained in the NRO account in Indian currency. Now what kind of earning he is getting from India when he is living abroad? might be it can be a rent of his home, rent of his warehouse, the pension he is getting from the government scheme, or any other source of income that he is earning from India, that will be maintained in the NRO account. Okay, this is the main difference between the two. And the third, we have FCNR account, foreign currency non-resident account. This is the account in which in foreign currency term deposits can be opened by the NRI and PIO. And the foreign currency term deposit will be done on those currencies which are demandable in the market. Almost all the currency we are allowing, but yes, there are certain currency which are demandable in market, they will be getting preference here. So these are the three types of account: NRE, NRO, FCNR. So your right answer will be B option. Okay, so I guess it is clear. Second question is asking, the resident POA holder is not allowed to do what? So the resident power of attorney holder is not allowed to do which of the following thing? To open a NRE account. Second, repatriate outside India funds in the account except to the NRI account holder. Make payment as gift to a resident on behalf of the account holder. Transfer funds to another NRE account. All A to D. Now let me know which of the following is correct. So if a resident person is having a power of attorney, it's very obvious he cannot open an NRE account because he is resident, right? Second, repatriate outside India the funds in the account except to the NRE account holder. No, this cannot be done. Then make payment as gift to a resident on behalf of the account holder. No, cannot be done. Transfer funds to another NRE account. No, it cannot be done. So right answer will be E. All A to D are not allowed to the power of attorney holder. Okay, so your right answer here will be E option. Right answer is E. Now, who can issue ICCs, Indian International Credit Card, to NRIs, PIOs, and the transaction may be settled inward remittance or from the card holder's FCNR, B, NRE, NRO account. Now, the question is asking who can issue. Hana, question is asking who can issue ICC to NRIs or the PIOs. Hana, and the transaction may be settled in what? By inward remittance or from the card holder's FCNR. B account, NRE account or NRO account. Who can do that? So only the banks who are authorized by RBI to participate in the foreign currency or to allow their customer to participate in the foreign currency, they will be allowed here to open or to issue these cards to the NRI and PIO, as well as the inward remittance. Inward means money is transferred from abroad to India. So right answer is authorized dealer. The authorized dealers are allowed here by Reserve Bank of India. So your right answer will be B. Okay. Next, remittances of asset requiring the approval of. Remittances of assets requiring the approval of which of the following? The PMO, the Ministry of Finance, the RBI, or none of the above? And the right answer for this question will be obviously RBI. If you are remitting a certain asset, then you take to have permission from Reserve Bank of India, the central bank of the country. Okay, so right answer will be your C option. Right is C. Next, investment in the following sectors is not permitted even for NRIs, OCIs, except where indicated otherwise. So now NRIs, we all know, non-resident Indians. What are OCI? They are overseas citizen of India. They are the persons who took birth in a certain other country. They are living in country. They are living in India and we have given them the citizenship. These persons are known as overseas citizen of India. Okay, now you have to answer which of the following sector is not permitted. First is saying lottery business including government, private lottery, online lottery. Second is saying gambling and betting including casinos. Third is saying chit fund except NRIs, OCIs on non-repatriation basis. Then we have Nidhi company. Then we have trading in transferable development rights. then real estate business or construction of farmhouses. Out of these, you have to answer which particular transaction is not permitted, not allowed. A, B, C or D. So it's very obvious: gambling, lottery business, the chit fund, the Nidhi companies, the trading in transferable development right, the real estate business or construction of farmhouse. These all activities are the kind of activities which are prohibited for your foreign investment. So the right answer will be all of the above. These you have also studied in IEIFS subject when you study the FDI prohibited areas. All these areas will be there. Okay, all these areas will be there. So your right answer will be D. All are not permitted here. And option number D. Okay. Acha, out of this, if we talk about the certain terms, like chit funds are very famous, but they are very risky. So do remember this one thing: if we are talking about risk and return, you will find that they both are directly proportional. If return is high, the risk will be high. If the return is low, the risk will be low. Like in the government securities. In the government security, there is a zero risk that the government will do any kind of fraud with the persons who have invested in the government security. So there is no risk. It's mean there is a very minimum return. And if you talk about the chit fund will give you, it can double your money within 15 days. I hope you have heard about these institutions. They have taken money from the public and they use that money in a lottery, not in a lottery, but yes, in a such a form they will write the name of all the persons who have given money to you in a chit, in a bowl, and one of them will be taken out, and whosoever have got that particular chit name, that person will got the whole amount of money. So it give you a kind of maximum investment in a minimum days, maximum return in a minimum days. So that's why it has a risky as well. So maximum chit funds are fraud. And they also, if we talk about who regulates them, the respective state governments regulate them. So it gives you a high return, and that's why it have a high risk as well. Now the Nidhi companies are those small companies who are working only for their member. They are getting fundraise from their member and they only provide fund to their members. Okay, that is Nidhi company. So next question is, SNRR accounts are essentially for foreign national or entities with businesses relationship with individuals entities in India for the purpose of which of the following? For the purpose of investment in India, for the purpose of import of goods and services, for the purpose of export of goods and services, or all of the above. So question is asking about SNRR account. The question is asking about which account? It is asking for the SNRR account. Let me know which of the following will be right. So SNRR account is simply your special non-resident rupee account. Okay, it is what? It is a special non-resident rupee account. These accounts are essential for the foreign nationals or the entities with business relationship with individual or entities in India. If they are having a business relationship with Indian entities or individuals, they have to have this account. And the right answer is all of the above. For investment in India, for import of goods and services, as well as for import or export of goods and services. So your right answer will be D. Okay, remember the full form: special non-resident rupee account. Special non-resident rupee account. It will be open when the foreign nationals want to do business in the country with a partnership with Indian company or Indian individual. Now, citizens of Dash cannot transfer immovable property in India without the prior permission of RBI. So, if you want to transfer immovable property will always be your land. It will be only done when RBI gives the permission. For which country? Syria, Hong Kong, Iran or Iraq? So your right answer will be, okay, right answer will be your B, Hong Kong. The RBI permission is mandatory there. Now, Facility for acquisition of property for long-term visa holders is available to a citizen of which country? Is it Bhutan, Myanmar, Afghanistan or Nepal? Facility for what? For acquisition of the property for your long-term visa holders. It is available to the citizen of which country? To the citizen of your Myanmar. It means B option. Right answer is your B. Do remember these kind of transaction, like which country is allowed for what particular transaction, which country is not allowed for what transaction. These kind of questions have been seen in the paper. Now, funds in dash account cannot be freely repatriated outside India. So which of the following account it is from where you cannot repatriate the fund outside India? A, B, C or D? Now, because the SNRR account will be open for the business purpose, when the foreign national wants to do business in India, that's why they are opening this account, and that's why the D option will be your right answer. In the SNRR account, it is not allowed. Okay, so your right answer will be D. Good morning everyone, welcome to the official YouTube channel of Officers at 24/7. So first of all, let me know how are you all, and those who have already joined us here, as you already know that every day we are starting our day with the principles and practices of banking session. So today this is the 10th session, it means the 10th lecture of your module A we are having today. So apart from that, those candidates who have first time joined Officers at 24/7 channel and you are watching this session first time, so I will let you know every day we are discussing one particular topic of your module A in a form of MCQ. The important concept from the whole chapter we are discussing here for half hour, and if you haven't seen the earlier session, the playlist already available on Officers at 24/7 channel, so do check the playlist. And if you find any kind of doubt in any session, you can write your question on comment section. I will be checking your comment and answering there. Apart from that, if you have any query regarding your JAIIB preparation, that you can also ask here. And I will be your mentor for IEIFS as well as for PPB. Between paper 1, paper 2, I will be discussing with all of you for your JAIIB preparation. Okay, so let's start the session. And today this is our 10th number class, as you can see, and the 10th class module A we are discussing. So the 10th class we have, that is foreign currency accounts for residents and other aspects. So if you remember in the last session, we had first question of the session that was asking what kind of account can be opened by the NRI or PIO. So we have discussed NRE account, NRO account, FCNR account can be opened. But here we are not talking about NRE, NRO account, we are talking about the account that can be opened in the foreign currency. So if you remember in one of the session of yours, I have also discussed what type of accounts are there which can be opened in foreign currency. So I have told you, you can open FCNR account as well as you can also open EEFC account. So these are the accounts that can be opened in form of foreign currency. So that's what we are going to talk today in this particular session. So let's start the session. Also be very active in the session. If you find any doubt in the session, do ask in the comment section. And after the end of each and every session, I would request to all of you, let me know in the comment section like how many answers you have given correct in this particular session. So let's start with the first question that is asking about residents can hold how many in types of accounts in foreign currency in India. How many types of accounts can be opened by, one second, can be opened here by residents. Okay, that's what your question is asking. So question is asking residents can, resident means your Indian citizens. Residents can hold how many types of accounts in foreign currency? First is 2, 3, 4 or 5. So right answer will be your A, B, C or D. Which of the following will be right answer? Okay, and the right answer will be your 4. It means 4 accounts can be opened by residents in foreign currency in India. So right answer will be your C. So do remember how many accounts the Indian residents or the residents can open in foreign currency in India. That there is 4 accounts. Okay. The second we have foreign currency denominated account maintained in India cannot be in the form of dash. If you are opening a foreign currency account in India, it should not be in which particular form of account. Savings account, fixed deposit, current account, or recurring deposit. So you know there are deposits of two types in every bank, है ना? That is demand deposit, and you have term or time deposit. Demand deposit as well as term or time deposit, you have demand deposit covers your CASA and time deposit covers your RAFA, that is recurring account and fixed account. Okay, so this is the deposit we are talking about here. So which of the following will be the right answer? A, B, C or D? And the right answer will be, you can open CASA RAFA accounts in NRE and NRO. Okay, but that is your Indian rupee account. Hana, if you are opening a NRE and NRO account, that's an Indian rupee account that is opened by NRIs or PIO. Here we are asking the foreign currency denominated account maintained in India. So there is FCNR account, FCNR account, they are in the form of FD and current account, but not in the form of recurring account. Okay, so foreign currency denominated account maintained in India, it cannot be in the form of RD, that is recurring deposit. So right answer will be D. Next, foreign currency denominated account cannot be maintained in India by dash. Who cannot maintain foreign currency denominated account in India? First is asking ship managing agencies in India, second is saying Indian company receiving FDI, third is saying exporters exporting against advance payment, fourth is saying composite insurance broker. So out of these four, who cannot maintain the foreign currency denominated account in India? A, B, C or D? So if we are talking about ship managing agencies can have, Indian company receiving the foreign direct investment they can have, composite insurance brokers can have, but the exporters who are exporting against advance payment they cannot. Hana, they cannot have the foreign currency denominated account in India. So right answer will be your C. Right answer we have is C. Next question is, which statement are incorrect in terms of diamond dollar account scheme, that is DDA account. There are certain statements have been given to you, 3 statements have been given, and you have to answer which of the following is incorrect in context to your diamond dollar account scheme. First is saying realization of export proceeds and local sales in US dollar of rough cut polished diamonds and pre and end. Okay. Payments for purchase of rough cut and polished diamond can be made, funds can be transferred rupee account. Third, the account should be a non-interest bearing current account. So diamond dollar account we are talking about, and you have to answer which of the following is not correct in context to your dollar diamond account scheme. A, B, C or D? So first of all, diamond dollar account, if we are talking about, realization of export proceeds and local sales in US dollar of your rough cut polished diamonds are allowed. So this is the true. Second is saying payment for purchase of rough cut and polished diamonds can be made. Yes. Funds can be transferred rupee account. This is also true in the DD account. The account should be non-interest bearing current account. This is also true. It means right answer will be all are correct. None of these statements are incorrect. All are the correct statement of yours regarding DDA account scheme. So right answer will be your D. Okay, do remember what is DDA is? It's a diamond dollar account. Okay, next we have which of the following person can open a foreign currency account with the bank outside India for normal business transaction. So question is asking which of the following person can open a foreign currency account with a bank outside India for normal business transaction. And these are the options in front of you, the statements in front of you, you have to answer. So the first statement is talking about here that an authorized dealer in India with its branches, head office, correspondent outside India, a branch outside India of a bank incorporated in India, an Indian shipping or airline company, insurance, reinsurance companies registered with Adda for insurance and reinsurance business, an Indian firm or company body corporate for its foreign office branch or its representatives, an exporter exporting services and engineering goods on deferred payment terms, it means in installment, on a turnkey project or a construction contract abroad. So which of the following statement is regarding opening a foreign currency account with a bank outside India for normal business transaction. Which statements are there if you want to open a foreign currency account with bank outside India for your normal business transaction? Which is it? A, B, C or D? And the right answer will be your D. All 1 to 6. Right answer will be D. Okay. Now next. Foreign currency denominated account maintained in India cannot be in the form of. Acha, this is we have done. That is recurring deposit. Hai, this is repeated question. Now next. Okay. 1 second. This is also repeated. Now. Public servant means a public servant as defined in section dash of the Indian Penal Code 1860. Which of the following is correct? Which penal code? Is it 19, 20, 21, 22? So public servant means a public servant as defined in section which of your Indian Penal Code 1860, 19, 20, 21, 22. Which section is it? And the right answer, we have 21 section of Penal Code 1860 talks about the public servant, that who is public servant, it defined the public servant. So right answer is your C, 21. Next we have person can open a foreign currency account with the bank outside India for the normal business transaction, and these are the statement in front of you. First is saying an authorized dealer in India with its branch, head office, correspondent outside India. Second is saying a branch outside India of a bank incorporated in India. An Indian shipping or airline company, only one, both 1 and 2, only 3, all 1 to 3. Which of the following can open the bank account outside India in foreign currency for their normal business transactions? And the right answer will be your all of the above. All can open the foreign currency account for the business purpose outside the India in a bank. That is right answer will be D. Now diamond dollar account scheme, the account should be a non-interest bearing account in which form? It should be a FD account, RD account, current account or a savings account. So diamond dollar account you have to open, and that is saying it should be non-interest bearing. What type of account? FD have account. FD have your interest payment situation. RD also pays the interest. Savings account also pays the interest. So right answer will be your C. So diamond dollar account scheme, the account should be a non-interest bearing account. That will be in the form of current account. So right option will be your C. Okay, right answer will be your C option. Good morning everyone, welcome to the official YouTube channel of Officer Sarah 24/7. How are you all? So first of all, let me know is audio video both are okay, are we good to go? And this is our particular session regarding your principles and practices of banking. As you all know, every day we are starting our day with the PPB, and every day we are discussing one particular unit of your module A. So today as well, we are going to discuss your module A, unit number 11. So it means this is our 11th class in which we are discussing module A, most important questions. So when we talk about PPB, as we know, there are 55 units in 4 modules, and the module A and B have major portion of your syllabus, because module A and B together covers your 41 units. So 1 to 41 units will be in the module A and B, and then 42 to 55 you have in the module C and D. So accordingly, the weightage in the paper will be the same. 60% weightage have been given to A and B module, and 40% have been given to C and D module. So make sure you are preparing accordingly on the basis of your syllabus that have been given by IIBF. So this is our 11th class, and the topic of 11th class is cash management services and its importance. That is your module A, unit number 11. Okay. So before starting the session, first of all, I will be your mentor for IE, IFS and PPB, that is paper 1 and paper 2 for your JIB. Apart from that, these regular sessions on Achiever series is happening Monday to Saturday only on Officer Sarah 24/7. You will find PPB sessions in the morning at 6 AM and the IE, IFS session in the evening at 7 PM. And do make sure you are joining both the sessions, because they are important to understand what to study in your paper. Apart from that, I can say these are the sessions which will let you know how to study and in what depth you have to study your content. So let's start when we talk about the cash management services and its importance. The cash management is not a kind of service where you accept the deposit from the public and provide withdrawal to them. This is not what the cash management here means. So what does cash management means? Cash management services is a kind of services which helps you to maintain liquidity in client's business. So if we talk about your cash management is a service which bank provide to its customer, in which bank makes sure that its customer's business will have proper liquidity all the time. Liquidity means simply the cash flow. So let's say, for example, if you are doing business or I am doing business, whatever person is doing business, they need a cash proper to start their business, to continue their business, to make payment to their shareholder, etc. So every business needs cash. Okay, and every business have assets and liability. Now what happens when we do not match the asset and liability, and when there is a liability and asset mismatch, that creates a business a certain kind of hurdles that can take into the situation that the business you have to close, or I can say the winding up of your business can occur because of the asset liability mismatch. So that's why it's very important for each and every business to have a proper cash, to have a proper liquidity in the business, because we do not know at what place, at what point we have to provide the certain facility, or I can say we have to provide the cash to their shareholders. Let's say, for example, the certain shareholders have provided you cash. It means they have invested in your company, and you were thinking that this investment will remain with the company for at least 1 year. But before 1 year, shareholder wants their capital back because they are selling your shares back. In that situation, you should have proper liquidity that you can make payment of them. So it's very important every business have a proper liquidity at all the time. Whenever the uncertain, unexpected situations occurs in the business, you have a sufficient cash flow to make that payments or make that unexpected thing continue. Okay, so this is what the cash management service is. Now banks provide these kind of cash management service to the corporates, to its clients, and make sure that they do not fail because of low liquidity with them. Okay, and these services also can be customized by the bank. So as per the requirement of the customer, the bank can customize its cash management services for a particular client. Okay, so this is basically cash management services. So let's start with the MCQ. Okay, and do let me know which of the following will be right. First is saying, which of the following is not the objective of cash management system? Not the objective of your cash management system, you have to answer. First is saying to improve revenue, to maximize profit, to minimize cost, to make easy housekeeping. Which of the following is not a objective of your cash management system? A, B, C or D? And the right answer for this particular question will be D, to make easy housekeeping. So if you perform the cash management services, if you do the cash management system, it will improve your revenues, it will maximize your profit, it will minimize your costing, because you have already decided how to do it and what to do with your business cash, with your business liquidity. It will not impact your business in that scenario. So the right answer will be D option, to make easy housekeeping. This is not the objective. Now, a study conducted by Gillen and Associates and the how much top Canadian enterprises could save -billion annually by applying emerging electronic cash management strategies. So they are asking how much top Canadian enterprises are saving, okay, annually. By what? By applying their emerging electronic cash management strategies. Because the Canadian enterprises were earning a lot of money by doing simply electronic cash management strategy. That's why it became very famous in the market. So this associate was doing this electronic cash management strategies that help them to raise capital, that help them to maintain certain capital with them. And that's where it became very famous, and every business now wants the cash management system. And the right answer for that will be $400 billion annually they can save. And that's why every company wants now to have the cash management strategy. So this is what, or this is how the cash management is actually helping your business. Now next we have cash management comprises which of the following? To the collection of cash, to concentration of cash, to disbursement of cash, only one, only two, one and two, all 1 to 3. So which of the following will be done by the cash management? Is it simply to collect the cash, to concentration to the cash, to disburse the cash, or all of the above? Which of the following is correct? Okay. So right answer here is all. It helps you to collect, to do the collection of cash, to do the concentration of the cash, and to do the disbursement of cash. So right answer will be all 1 to 3. Next we have which of the following denotes the cash management service. Which of the following denotes the cash management service? And these are the option we have. First is saying holding minimum cash at branches, providing adequate cash at ATMs, providing solution to optimize liquidity of corporate, and none of the above. So what actually your cash management services, when you're talking about that bank is providing cash management services to its corporate, to its company, to its client, what actually we mean about this? A, B, C or D? Which of the following is correct? A, B, C or D? Okay, and the right answer is obviously providing solution to optimize the liquidity of corporate. Okay, holding minimum cash balance at branches is not your cash management. Providing adequate cash at ATM is not cash management. Cash management is when you provide solution to the corporates, what to do and how to do with the, what to do and how to do and what conditions should be prepared for an enterprise, for a corporate, so that they in the future do not have to face loss because of the liquidity. Like how much liquidity you have to maintain and how, where you can maintain it, and how with maintaining a cash with you, you also be able to raise the capital or to earn certain amount of money on that cash. Providing all these advices to the corporates is your what? It's your cash management service. So the right answer you have is C option. Okay. Next, a scientific cash management solution results in which of the following? First is saying significant saving in time, decrease in interest cost, greater accounting accuracy, and all of the above. So which of the following you can call it that it's a scientific cash management solution? It means scientific means it is experimental, like you have done experiment and then you have find out that this is the benefit of the cash management solution. Having significant savings, decreasing in interest cost, greater accounting accuracy, or all of the above. And the right answer for this question will be all of the above. Okay, when you do the scientific cash management solution, it provides you benefit all of the above. So your right answer will be D. Okay, now while selecting a bank for sourcing cash management service, a corporate takes into account pricing, reliability, security. True, false. You have to answer, is this a true or this is a false? So question is saying that while selecting a bank, for what purpose? For sourcing cash management service, a corporate takes into account pricing, reliability, security, etc. Is it true or false? So it's very obvious that when you are sourcing, like when you are taking the cash management service from a bank, when you are deciding from which bank you want to take this cash management service, at that point you will have what? you will have the proper survey about the bank or the service which it is providing you, है ना? And as well as same will be done by the bank. Like when bank is providing cash management service, then in that sense bank is also have to study your business and then will provide you the cash management service. So the corporate actually checks the pricing, the reliability and the security that banks offers in form of the cash management service. So the statement is true. Okay, the statement is true. A will be the right answer. Now, next question. A firm's cash program is aimed at accelerating cash inflows and controlling cash outflows. So, when you are talking about that a firm's cash program, Hana, it is what? It aimed at accelerating cash inflow and they control the cash outflow as well. Is it this statement true or a false? Question is saying a firm's cash program is aimed at accelerating cash inflow and the controlling cash outflows. A, B, C, A or B, true or false? And the right answer is very obvious, true, because firm's cash program is also focusing that what inflow we need and what outflow we need, है ना? It tried or it make a strategy for the cash inflows and the cash outflows. Okay, so right answer is true. And that's what the cash management service actually is. That helps you out in your business to have the proper liquidity and to decide where this liquidity have to be used in the business. That in return, you will get profit. Now, which of the following challenges banker need to address in cash management services? So the certain challenges have been written in front of you and the question is asking which of the following challenges banker need to address in cash management services. First is saying need to comprehend the client's line of activity, like how much product line the customer have, 2, 3, 4, 5, let's say Tata is there. It's a software company, it provides tea, Hana, it provides steel, so there is a product line in a Tata. So that the bank have to be known, Hana, because it is a challenge for the bank. Bank before providing customer cash management service, bank should know what is the product line of a company. Second, decision regarding sourcing of software. The software should be inbuilt. The software should be taken from the third party. The software should be taken on a rent for the purpose of your transactions. So it also a major decision for that bank have to take. Coordinating the activity. It's also important when bank provide the services to you. So the bank coordinate with the management of your business as well as the software providers, everyone. Now, decision regarding sourcing of software. So this is the 2 points. Now, provisions of other advisory services to the clients. Apart from that, you have to provide what? You have to give the advisory services to the client, that you can give advice to them what to do next, where should be investment, where the investment should be done, etc. So it means all are the challenges that banker need to address in cash management service. So right answer is D, all are correct, all are the challenges. So it's very obvious when bank is offering a cash management service to the particular company, to the particular corporate, a lot of issues can be there in the front of bank. Because if bank do not know the product line, how the bank will provide right decisions. Apart from that, let's say bank do not able to coordinate with the departments of the businesses, the department of the corporate, then bank will not be able to manage the cash inflow and cash outflow of a company. So all these are the challenges that banker face. So the right answer will be D. Okay, next. Fundamental objective of cash management is, what are the fundamental objectives? First, optimization of liquidity through improved flow of funds. Second, technological development. Third, opportunity cost of holding cash. Fourth, all of the above. So you have to answer out of these 4, what is the fundamental objective of cash management? A, B, C or D? A, B, C or D? And the right answer is A, that optimization of liquidity through the improved flow of funds. Okay, so through the improved flow of funds, that's what the fundamental objective of cash management is saying. So right answer we have is A. Okay, next. Which of the following is the objective of cash management system? So which of the following we have objective of cash management system? To improve revenue, maximize profit, minimize cost, establish efficient management system to assist and accelerate the growth, or all of the above. Now, out of these four, which of the following is your objective of cash management system? What help this system is providing you? A, B, C, or D? Okay, and the right answer will be all of the above. All of the above is the objective of your cash management system. Okay, all of the above is the objective of your cash management system. So the right answer will be your D. Good morning everyone, welcome to the official YouTube channel of Officer Saturday 24/7. So first of all, let me know how are you all, as well as let me know is audio and video both are okay, are we good to go? So every day at 6 AM we all are meeting for your PPB session, that is Principles and Practices of Banking. And as I keep saying that the PPB have biggest syllabus, it have 4 units, 4 modules, 55 units are there. And if we talk about these 55 unit, it has a lot of syllabus with it. So you can see there are 1000 pages book that we have to cover in the PPB, and that was provided by IABF, and trust me, each and every page of your book is very important. And this 1000 pages book is double-sided book, so it means you can easily understand how much we have to cover. So that's why do make sure, if you haven't started preparing conceptual understanding or the conceptual clarity of your topics for all the 4 subjects, then do start it ASAP, because a lot of things are there, a lot of syllabus is there, a lot of revision, practice, everything is there. So do not waste your time. Be very careful while you start your preparation. Do the conceptual understanding study. Second, do make sure you are revising properly on the regular basis. And third, practice your paper. These are the 3 things which is required to clear this paper with the consistency. So do make sure you start early. Okay, so let's start the session. Before starting or moving towards the class, I will be your mentor for IE, IFS and PPB for JAIIB exam. This is your paper 1 and paper 2 for the JAIIB, and here we are going to discuss, this is your class number 12. It means till now we have discussed the 12 units of your module A. Hana, we have completed the 12 units of your module A. This is the 12th unit, and total units in the module A you will have 21 units. Okay, so we have to cover each and every unit every day. Now you can see today's units topic is payment and collection of checks and other negotiable instrument. That is your unit number 12 of module A. So as always, first let's discuss something about this particular chapter, then we will move towards the questions. So when it comes to the payment and collection of check and negotiable instruments, let's talk about the negotiable instrument first. Negotiable instruments are the transferable instrument. What are negotiable instruments? They are transferable instrument which can be used for the payment purpose from one party to another. They are the transferable instrument. Now, if I talk about the transferable instrument, it means what? Whenever you want, you can provide that document to the another person for making your payments. In case of negotiable instrument, there is an act that is named as Negotiable Instrument Act 1881. It has defined that what are the negotiable instrument right now we are using. So in the section 13 of your Negotiable Instrument Act 1881, we have 3 negotiable instruments: promissory note, bill of exchange and check. Promissory note is defined under section 4, bill of exchange is defined under section 5, and check is defined under section 6. When it comes to the these negotiable instrument, they are simply a kind of document. They are the written document which can be used for the payment purpose, and that can be transferred from one party to another. Let's understand them one by one. So the first negotiable instrument we have is promissory note. Section 4 of Negotiable Instrument Act 1881 talks about it. So promissory note is a written document in writing. Promissory note is a document in writing, not being a currency note, but yes, contains an legal underwriting. That is, it contains the undertaking of providing the payment of a certain amount of money to a certain person on a certain date, and that document will be signed by the maker of the maker, or we can say the person who makes the payment to the other party. So promissory instruments is an instrument in writing containing an unconditional undertaking to pay a certain sum of money to a certain person on a certain date by when also the maker will be signing the document. So let's say I am promising you that on 1st of January I will make payment of 50,000 rupees. So this is a promissory note. I am making promise to you. Acha, I have used one word, that is unconditional undertaking. It means if I have written on a promissory note that I will make payment of your 50,000 rupees on 1st of December or 1st of January, let's say, then I have to make that payment on 1st of January. No condition can be added here. I cannot write this kind of promissory note that I am promising to the X person that I will pay 50,000 rupees on 1st of December if there was raining on the same day, or if I will get my payment of the earlier consignment. No condition can be added. If you have said that you will pay on 1st January 50,000 rupees, you have to pay it. That's the unconditional undertaking is there in the promissory note, and that you have to take by yourself. This is unconditional undertaking taken by the person who have to make the payment, and the person have to sign the document. That's the promissory note. In promissory note, there are two parties. One who is the maker, and the another one who is the receiver. Okay. Now, second, let's talk about the bill of exchange, section number 5. So, bill of exchange is also a written document. Bill of exchange is also a document in writing containing an unconditional order to pay a certain sum of money to a certain person or the bearer of a document, or on the order of the bearer of a document by signing it by the maker. So now bill of exchange, I have said same. It is a writing document. It's pay a certain sum of money to a certain person or on the order of the bearer. And I have added one word, that is unconditional order. What does it mean? It means in the bill of exchange, you are giving order to another party, then make payment on this particular day. So in the bill of exchange, more than two parties can be available. In the bill of exchange, you are not taking your undertaking by yourself. You are saying to the bank, like I have written 1st January 2024, 50,000 rupees will be paid to A, B and C. Then this is the responsibility of bank that have to be made. No such kind of conditions will be added by the bank that I will not be paying on 1st January or 2nd January or 4th January. No such kind of condition can be there. So now you are giving unconditional order. There should be no conditions. Unconditional order have been given to the bank. If it is written that on 1st of January, 50,000 rupees will be given to A, 20,000 rupees will be given to B and 50,000 rupees given to the C, then bank have to make payment to three parties, all the three parties on 1st of January. This is your bill of exchange. So bill of exchange and promissory note have only two difference. The first difference is there. In the promissory note, you have to take unconditional undertaking. Like you are making payment, you have to take unconditional undertaking. In bill of exchange, you are providing unconditional order to your bank. Second difference. In promissory note, there will be two parties. In bill of exchange, there will be two or more than two parties. Okay, so this is what we are talking about, the promissory note, bill of exchange, section 4 and 5. Now let's move to the section 6, that is your check. Now when we talk about check, check is defined under section 6. Check is simply a negotiable instrument. We can call check is a type of bill of exchange which is drawn on the name of a specified person. It will be paid on the order or otherwise. It can be endorsed by the person. So check can be endorsed. Like if I want to make the payment, if I want the same check to use to make payment to the other person, I can do that. I can endorse it on the back side of a check. So endorsement means transfer of check to the another party. So that's a check. Check have three parties. First it will be drawer. Drawer means the person who makes the check, who issues the check. Second will be drawer. First is drawer. That is the person who is making the check. Second is the drawee. Drawee means the bank that will make payment. And the third is the payee. Payee means the receiver who will receive the money. So drawer, drawee and payee, these are the three parties in the check. That is maker, bank and receiver respectively. Okay. So now we have CTS as well, check truncation system. The check truncation system we have is under section 6(1) of Negotiable Instrument Act 1881 have been defined, which says that the physical movement of check have to be removed and only the electronic image will be used for making the payment of your check. Okay, so this was about all the topic. Now let's move forward with the MCQs, and we will discuss in the form of MCQs now. So the first question is talking about section 131 of Negotiable Instrument Act. Act extends protection to the dash, to collecting bank, to paying bank, to drawee bank, or to negotiating bank. Which of the following bank will get protection under section 131 of Negotiable Instrument Act? So this section gives protection to the collecting bank. To whom? To the collecting bank. The protection will be given by the Negotiable Instrument Act. So right answer will be A. Next. Second question is saying where a customer by a letter has advised the bank directing the banker not to honor, pay a particular check. Such letter is called dash. What's this letter? First is saying letter of credit. Second is saying stop payment letter. Third is saying mandate. Fourth is saying garnish order. Now let me know which of the following order is it. So you are a customer by a letter has advised the bank directing banker not to honor or pay the particular check. So this is what type of letter? It's very obvious, a stop payment letter that have been given by the customer to the bank that do not make the payment of this particular check. So right answer will be B. Okay, your right answer will be what? It is B. Now, promissory note is defined under dash section of Negotiable Instrument Act 1881. So under which section promissory note is defined? 4, 5, 6 or 7? And we have just discussed section 4 talks about your promissory note. So 4 is promissory note, 5 is bill of exchange, 6 is check. Do remember that. So right answer is 4. Now next. Bill of exchange and check is defined under dash section of Negotiable Instrument Act 1881 respectively. So I have just told you bill of exchange and check section number in the act, that is section 5 for bill of exchange, section 6 for check. It means right answer will be C. Okay, now next. A check favoring Rajkumar or order is stolen. The thief endorsed the check as Rajkumar in his favor. The check is presented in clearing and paid by the drawee bank. The bank have made the payment of the check. True owner letter sent a legal notice to the bank. What is the liability of the bank? Is bank liable for this situation or not? So these are the 4 options in front of you. You have to answer what is the liability of a bank. So there was a check for the Rajkumar, and the check have been stolen. And the thief has taken a payment. The thief has endorsed the check as in his favor as a Rajkumar. So in that situation, bank also made the payment. So what is the liability of the bank? Bank is liable to make payment to the real owner or not? Let me know. So first is saying the paying bank will get protection under Negotiable Instrument Act. Second is saying a forgery does not give any right to the paying bank, hence is liable. Third is saying as per section 85 of the Negotiable Instrument Act, the paying bank is liable. Fourth is saying as per section 131 of Negotiable Instrument Act, the paying bank is liable. And the right answer will be the paying bank will get protection under this act in this situation. So right answer will be your A option. Okay, right answer is A. Next question. Payment in due course is defined in which section of Negotiable Instrument Act 1881? So we are talking about payment in due course. Due course means on the within the validity of a check, the payment should be made. It is defined under which section of Negotiable Instrument Act? 4, 5, 10 or 31. So you know it is not 4 because there is promissory note. It is not 5 because there is bill of exchange. So 2 options have been eliminated. It can be either 10 or 31. And the right answer will be your section number 10 talks about the payment in due course. So your right answer will be C option. Okay, right answer we have is C option. Next. A forged check is an dash. So forged check is your valid check, invalid check, dead or stale check. So right answer will be, if it's a fraud, it cannot be valid. Dead check, something like that, no term is there. A stale check is the check when the validity of a check is expired. The validity of check is 3 months, and when the check validity have expired, you cannot make the payment of that particular check. So it is invalid check. Right answer is invalid. Forged check is your invalid check. B. Do remember, stale check is very important. Stale check is simply a check that has expired its validity. So when the validity of a check is expired, that is known as a stale check, and the validity of check is 3 months now. Okay. Now, banks slip prima facie evidence of certain facts as per that section of Negotiable Instrument Act 1881 under section 145, 146, 147, 148. Which of the following section talks about this situation? A, B, C or D? Let me know the right answer, A, B, C or D, and the right answer will be your B, 146. Right answer is what? Section 146. Okay, next question is asking about crossing of a check is defined in which section of Negotiable Instrument Act? So there are 3 types of crossing. It has a general crossing, it has a special crossing, it has the account pay crossing as well. Hana? General crossing, simply there are 2 parallel lines will be there. In account pay crossing, in the parallel lines, that account pay will be written. In a special crossing, in the parallel lines, account pay with a particular bank name, it will be mentioned. So there are 3 types of crossing, and it is defined under your 123 and 124 both. So the right answer will be your D. Okay, A and B. So right answer will be your D option. Okay, right answer we have is D option, that is both A and B, 123, 124. Next we have section 131 of Negotiable Instrument Act gives protection for collection of dash. So we have seen that this act giving protection to which bank? To the collecting bank. In which document? Now you have to tell that. What document it is? It is a bill of exchange? Is it a promissory note? Is it a negotiable instrument, or is it a check? In which document this will be provided? Okay. So the right answer for this question will be for the check. The protection against check will be given to the collecting bank. So right answer will be D. Good morning everyone. Welcome to the official YouTube channel of Office Survey 24/7. So first of all, let me know how are you all, and also those candidates who have joined this session, let me know is audio video both are okay, are we good to go? So let's start. And those candidates who are first time joining this session, I would like to inform you all that this is our session in which we are talking about your PPB, principles and practices of banking. So as you know, the JAIIB next exam will be in the May 2024, and the first paper will be IEIFS. Second paper will be PPB, third will be AFM, and fourth will be Retail Banking and Wealth Management. So these 4 subjects you have. Each subject have 4 modules, and if I talk about paper 1 and paper 2, I will be your mentor for paper 1 and paper 2. It means IEIFS and as well as the PPB. So when we talk about IEIFS, there are 45 units in 4 modules, and when we talk about PPB, there are 55 units in 4 modules. It means the biggest syllabus out of all the 4 subjects we have is in PPB. So the principles and practices of banking achiever series is going on morning 6 a.m. Monday to Saturday, only on Office Survey 24/7, in which every day we are discussing one particular unit of your module A. So we have started from the module A, and module A is the biggest module of all the 4, because the single module covers 21 units out of 55. So now you can understand this is the biggest module. And if we talk about today's session, this is our class number 13. It means today we are going to talk about unit number 13 of your PPB, that is responsibility of paying bank. Okay, that's your module A, unit number 13. Apart from that, those candidates who have not joined the earlier session yet, they can check the recording that is available only on Office Hazard 24/7. In the playlist section, you will find all the other sessions recording already available. So if you are preparing for JAIIB May 2024, so I would like to give you one suggestion, that is start early. A lot of syllabus is there, a different pattern of questions will be seen. Talk about there are 4 subjects, each subject have 4 modules and a lot of syllabus is there. So you need a proper 3 months minimum. I'm saying minimum, with a very dedication, consistency. If you are preparing, minimum 3 months is required to complete your syllabus. The basic, it means the conceptual study. Then you have to do the revision by yourself. Then you have to give the full length mock test. In the between of conceptual study, you can go with the topic wise test which is available in the Achievers batch. But for full length mock test, after the syllabus have been completed, the revision have been done, you can start your full length mock test as well. Apart from that, apart from these 3 activities, if you talk about the types of questions, you will see there can be one-liner questions, fill in the blanks pattern, match the following pattern, your statement based question, your case study based questions, your numerical questions. Around 6 types of questions will be there. And all the types of questions will be done only when you have a conceptual understanding. But yes, the practice is very much important. Until and unless you find out the way how to deal with the statement based question, how to deal with the case study question, how to deal with the numerical question, you won't be able to perform better, because the questions are lengthy now. And if the questions are lengthy, you need to have what? You need to have a proper, what we can call it, the proper way to attempt the paper. Right? Because each and every question will need a different approach to be done. So let's say, for example, the elimination method. In the filling the blanks, in the match the following, in the statement based question, you can use the elimination method. That helps you out, and it will take a less time comparatively to cover your topic, or not topic actually, but the question. And if we talk about case study question, in that you have to think according to decision making power of yours. So the decision making approach you have to take in the case study questions. And in one-liner questions, simply there is no option in the one-liner question. If you know it, you know it. Otherwise, nothing else can be done. So every question need a certain practice of yours that will be helping you out to achieve better marks in the paper. Okay. So now let's move forward. This is very important, and PPB is a very huge subject. So do make sure you are focusing on it. So let's start. Responsibility of paying bank. We are talking about module A, unit number 13. So first question is asking about the law relating to the payment of checks and protection of a banker is contained in the dash. In which section, or in which act actually, this is, we are talking that law related to the payment of check, protection of a banker is defined. So when we talk about a check, what is a check? Check is a negotiable instrument. So negotiable instruments are those instruments which can be transferred from one party to another for the purpose of payment. Those are the negotiable instruments. And here check is a negotiable instrument because you can use check for the payment, you can negotiate it, you can endorse it from one person to another person. That's your check. Okay. So when we talk about check, it is defined under which section, which act? It is defined under Negotiable Instrument Act 1881. Section 6 talks about your check. So check is a type of bill of exchange which is issued by, or which is issued on the name of a specified banker. It can be paid to one person or on the order of the one person it can be paid. It means you can endorse the check. Endorse means you can transfer the check from one person to another for the payment purpose. That's your endorsement of check is. Achha, apart from that, the CTS also introduced. What is CTS? That is check truncation system. Check truncation system was introduced to stop the physical movement of check. We wanted to stop the physical movement of check, that is known as your, what we can call it, CTS, check truncation system, and it is defined under section 6(1) of your Negotiable Instrument Act 1881. Okay, so negotiable instrument means simply the instrument that can be transferred from one party to another for the payment purpose. Section 6 talks about check, section 6(1) talks about the CTS. Apart from that, we have promissory note that is defined under section 4 and bill of exchange that is defined under section 5. So we have 3 negotiable instruments. Promissory note section 4, bill of exchange section 5, checks section 6. Okay. Next. Second question is, a customer is bound to inform the dash about lost check leaves to pay, to endorsee, to collecting bank, है ना? So you have to answer to whom the bank have to, not the bank, sorry, the customer have to define, have to inform, sorry. If you got a certain check and you have lost certain check leaves, and you have a checkbook and you have certainly lost certain leaves. So to whom you have to define that, to whom you have to inform that, so that no fraud or forgery or something have been done. So it should be done by a customer, it should be informed by a customer to whom? To payee, to end. Payee means the receiver, the person who receives money. Endorsee means the person who endorsed check to another person. Collecting banks who is accepting the check. It's not always the collecting bank will be paying the money. Collecting bank simply accepting the check. And the drawee bank is actually the bank who is actually paying money from the account of the customer. So to whom it have to be informed? It have to be informed to the drawee bank. Okay, it have to be informed to whom? It have to be informed to the drawee bank. So your right answer will be D. Okay, next. In a joint account, if one of the signature is forged, then what? Let's say you had a joint account. Joint account means 2 or more than 2 people are having account in the bank. In the joint account, the signature have been forged. In that situation, the bank and the customer are equally liable. Second, only the customer is liable. Third, the bank is liable. Or fourth, no one is liable. So if the check is forged, now this is the responsibility of whom? This is the responsibility of the bank to check that the joint account holder signature is forged or not. If bank is not checking that, this is the liability of whom? This is the liability of the bank. Okay, only the bank is liable in this situation. So right answer will be C. Next, payment to be made in due course, dash. Payment to be made in due course means what? First, need not always be made to holder but can be made to his agent or servant. Need always to be made to holder but can be made to his agent or servant. Made to customer's agent or servant. All of the above are correct. So now you have to answer in this situation, payment in the due course. What does it mean? Payment in due course means simply within a validity you have to make the payment of a document. That's basically the payment in the due course means. Now, need not always be made to holder but can be made to his agent. It's saying need always to be a mat to holder. No, it's not mandatory you always have to make payment to the holder. Made to customer's agent or servant, it can be given to the customer or to him agent, or it depends. So right answer will be A. It is not required that the payment will be made always to the holder. It can be made to the agent or the servant of a customer. So the right answer will be A option. So payment in due course tells us that the payment should be done within the validity of your document, and it can be done to anyone. It can be done to the holder or the servant of the holder or the agent of the holder. Okay. Now next. Acha, what is the validity of a check? I have told you, within a validity you have to make the payment. So what is the validity of a check? The validity of a check is, first, when we talk about, it is used to be 6 months. But from 2013, it has been changed by RBI and it is only 3 months. After 3 months, your check will not be a valid check. And if it's not a valid check, it means what? It means very obvious, you won't be able to get payment after the 3 months. So the validity of check is 3 months. Section 89 gives protection to the paying banker of a check for what purpose? For misspelled, amount in figures and words mismatch, materially altered but does not appear to have been so altered, or for sign of a drawer. In what situation or in what case the protection will be given to the paying banker under section 89? First, second, third or fourth. It will be in case of misspelled, amount in figures and words mismatch, materially altered but does not appear to have been so altered. And the last one we have for sign of a drawer. Let me know which of the following is correct. Okay. Okay, so it will be C, that it is materially altered but does not appear to have been altered. In this case only the protection will be given to the paying banker under section 89. Okay, so acha, if we talk about that the amount is different in words and figures, in that situation the check will be dishonored, the payment will not be made. If we talk about the theoretical banking in the Negotiable Instrument Act, it has been said that if the amount in words and figures is different, you have to take the words amount right and accordingly you can make the payment. That's what the theoretical banking says. But in practical banking, the banker will always dishonor such kind of check. Okay, in case of misspelled, in case of amount mismatch, in case of insufficient balance in the account of the drawer, in all these situations, overwriting, signature is missing, date is missing, anything is there, in that situation check will be dishonored. Okay, so right answer will be C. Next, which of the following is are correct? So we have 4 options here. Which of the following is correct? In a joint account, if one of the signatures is forged, then there is no mandate and banker cannot make payment. Second, in a joint account, if one of the signatures is forged, then there is no mandate and banker can make payment. Can make payment or cannot make payment? Both A and B or none? So it's very obvious, if your signature is forged, so banker cannot make the payment, na? So right answer will be your A option. Banker cannot make the payment. The right answer we have is A. Okay. Now the next question we have here is section 10 defines which of the following. So we are talking about the section 10 here. What is the actual section 10 is talking about? First, there are 4 options in front of us. First is saying section 10 defines payment in due course to mean payment in what? In accordance with the apparent tenure of the instrument in good faith and without negligence to any person in possession thereof under circumstances. Okay, under circumstances which do not afford a reasonable ground for believing that he is not entitled to receive payment. Then apart from that, section 31 says obliges that the drawee bank having sufficient funds of the drawer in its hand properly applicable to the payment of such check to make payment when duly required to do so. Both A and B, none of the above. Which of the following is correct? Okay, so which of the following is correct here? So we are talking about section 10 defines which of the following. Section 10 we are talking about. So section 10 is talking about payment in due course of mean payment in accordance with the apparent tenure of the instrument in good faith and without the negligence to any person in possession, therefore under circumstances which do not have what? Afford a reasonable ground to believing that he is not entitled to receive payment. So section 10 talks about that, that's why it's correct. Section B, if we talk about section 31, it also obliges that the drawee bank having sufficient funds of the drawer in its hand properly applicable to the payment of such check to make payment when duly required to do so. Okay, that's what we're talking about in this section 10 and section 31. Clear? So section 10 talks about your define payments in the due course. So right answer will be your C option. Right answer will be your C option. Now, section dash grants protection to a banker on his making payment of a check. So which section grants protection to a banker? है ना, protection to a banker on his making payment of a check. Section 85, 87, 88, 90. Which section is it? So if we talk about you grants protection to the banker on what? On his making payment of a check. It will be granted under section 85. So these sections are there. This is a very small chapter. Huh? This is a very small chapter. Paying bank responsibility is a very small chapter, but it have a lot of sections that you have to remember. That what section 85 is doing, what section 89 is doing, what section 31 is doing, what section 10 is saying. These kind of things you have to cover. So section 85 grants what? It grants protection to a banker on his making payment of a check. So right answer you have is B. Now section dash lays down the criteria for payment in due course of cross check. So which section is it? Section 121, section 131, section 31 or section 11? Now the question is asking simply that the dash lays down the criteria for payment in due course of a cross check. In case of cross check we are asking about. Now if we talk about the crossing, there are three types of crossing. The general crossing, that is you have two parallel lines on the left side, left top of a check. That's a general crossing. Then we have account pay crossing. In the left side top, the account pay will be written between the two parallel lines. And there is a special crossing that the left side you will have two parallel lines in which it will be written account pay or particular bank's name. Let's say I have written SBI. So general crossing, account pay crossing, special crossing. These three types of crossing will be seen. Okay. So section which talks about the criteria for payment in due course of cross check, it is section 128. Hana, which section talks about this? Section 128 talks about the cross check payment in due course. So right answer will be your A. Okay. So this is what we have discussed about the responsibility of a paying bank. If you have any doubt, let me know in the comment section, or apart from that, let me know how many answers you have given correct in this particular session. So those who are watching recording of these sessions, do make sure after watching the recording, if you have doubt, or let me know how many answers you have given correct in the comment section. Apart from that, if you haven't seen the earlier 2S sessions, the recording is available. You can go to the playlist. You can find the recorded sessions there. Apart from that, these are sessions which are not sufficient to clear your paper, but yes, it is sufficient to have understanding what to study in a particular chapter. For that, what you have to do, you can go with the Achievers batch. So Achievers batch is the second English medium batch for May 2024 we have started, in which you are getting 24/7 recording of live classes. First you will get the live classes in which conceptual content will be covered. Then the PDF of live class will be available, recording of live class will be available. After that you will get topic wise test and full length mock test. After that you will get here the ebooks as well. Everything is available here. All these benefits are available in the Mahapack, plus all upcoming batches are there in the Mahapack. Plus, if I talk about your mini and Maha marathon, that will be different from your YouTube sessions will be there. So this is how you will get the content to clear your paper. To enroll, first you have to download the Adda 24/7 application. After downloading the application, you have to go to the home page and check the exam category there. So our exam category will be JAIIB CIB. So from here we have to find out the exam category. So click on the JAIIB CIB section here. Then go to the JAIIB May 2024. You have to click on the view all option, and you can say Mahapack have double validity and the other batches are also available right now. Because Mahapack have double validity, so I would say this is a value for money. Hana, you will get 1 year validity. In Achievers batch you will get 9 months validity only for one batch. Here in the Mahapack you will get 1 year validity, all the batches for May 2024. All the marathons are not available in the Achievers batch. All the marathons, revision batches, everything will be available in the Mahapack. So this is the value for money, Hana. But it depends on you, whatever you want. This is individual batch, that's the Mahapack, and this is individual batches is available of subject wise. So how to enroll? Click on the product, do check the offering of a product, validity of a product, go to the buy now option. If you use this code, you will get 75% discount. But for more than that discount, you can use the code Y496, click on the apply. When you apply, you will find 80% discount here, but this is not only. 1% more discount is available if you use the same code. Hana, that is Y496. You will get 81% discount with the 1-year validity, with all live conceptual classes, with ebooks, with class PDFs, with topic-wise test, with full-length mock tests, with mini and Maha marathons, with your revision batches, your power pack batches, your case study batches, everything. Everything is available with the 81% discount for your JAIIB CIB Mahapack. Okay, so around 5,400 something you have to pay for all the batches here, and trust me, once you have enrolled here, you do not have to go anywhere to clear your paper. This is sufficient. Okay, so this is how you can enroll. If you want to check all the sessions on YouTube, for that you have to first subscribe to channel Officers at 24/7 and then press the bell icon so that all the upcoming sessions notification will be given to you. Apart from that, I will be taking care of PPB, IEIFS, PPB I am taking on YT at 6 AM, IEIFS going on in the evening at 7 PM. So if you want to enroll in any of these batches, download the application. If you want to join YouTube session, subscribe the channel Officers at 24/7. Okay, so this is all for today. Let's meet again in the evening at 7 PM for IEIFS session, and tomorrow we will be meeting again for PPB at 6 AM. So thank you all for joining the session. Have a great day, everyone.